Good evening or good morning or afternoon to everyone. Happy 4th of July for my American viewers and anywhere they might be. Rafi should be joining us any minute, but I just wanted to start a little earlier. Nice to see quite a few people here already. Billy's here, of course. So yeah, Rafi should be coming on any minute now. Nice to see quite a few of you here. Hopefully you're enjoying your 4th of July. Over here in England, it's been, yeah, it is been, oh, here we go. Let me admit Rafi is coming on. Okay, here we go. Hi, Rafi.
Hello.
Hi. How are you?
Let me put my video on.
All right, there you go. Yeah, happy 4th of July, Rafi.
Yeah, it's not really my holiday anymore, but I appreciate it.
Yeah, well, you were born there, I guess, but yeah. Anyway,
Yeah.
a lot of our viewers are in the States, but Lord Humongous says I don't identify 4th of July, but anyway, he's one of our moderators, Lord Humongous. He's been following us for many years. It's nice to have you on, Rafi. We haven't spoken for a while.
Yeah, nice to be back.
Yeah, how are things in Israel?
I thought they were going to be worse than they would be at this point.
Yeah.
But it seems like they're trying to get more people vaccinated. And they're messing with our heads to do it.
That seems to be the same strategy here, even though they're telling us we're going to have no regulations from the 19th. But I think they're going to make it very dependent on what you do, that you have the two. I don't want to talk too much about the V word or else, because I got a warning a couple of weeks ago. First ever warning I ever got, just for speaking about an experience I had. Someone called me from a hospital in London, but anyway, yeah, I saw something said a few weeks ago, and it said like a ship in the ocean doesn't sink because it's a vessel and the water doesn't get in, so you're protected. So unless you make a hole in that vessel, you be fine. But if there's a hole and the water comes in, you sink. And I know it's hard, but that's what I'm trying to do right now, just to keep the water out and keep going. So
what's the lockdown situation in the UK now?
Yeah, I mean, we're not really locked down, but we're supposed to have done away with all the social distancing and masks on the 21st of June, but they delayed it to the 19th. But I think on the 19th, it will be okay. They're going to free everyone up. But traveling is really tricky now. Even the people who have been doubled with that, they're not being allowed to go to Europe unless they quarantine, and when they come back they have to have quarantines. And the other thing as well, it costs a lot, for the average family to go abroad. They have to do all these tests, and it costs more than the flights. So it's killing the entertainment industry, so to speak. So but one hope we have, though, is that England is doing very well in the Euro football championships. So they beat, I think, Ukraine yesterday 4-0, and they're in the semifinals now against Denmark. So my theory, and some other people say, if they get to the final at Wembley in London and they win, how could the government stop people from partying, and like going out and drinking and being happy? I think it's going to be very hard, and they might forget about the beer disease.
Wow. So I guess I'll have to root for Europe then,
or for England.
England. Okay, I'm sorry. I know nothing about this. So.
Yeah, I even think, though, Israel probably plays in the Euro Championships, but they probably didn't qualify for the finals, for the final tournament. Yeah.
It's been
So,
it's
yeah,
been a nightmare trying to get my wife's parents here. I mean, they had a flight, and they had all their stuff
yeah,
and their papers, and they couldn't get the consulate is ghosting everyone and not letting anyone come in, and so they didn't get permission, so they had to miss the flight and eat
mm,
that cost. And then
yeah,
we had to do it from this side. We had to go to the Ministry of the Interior here, and then the whole story. But like there's people who are trying to visit their dying parents here, Jews
yeah,
who can't get here because there's just too many hoops to jump through, and it's impossible to get through to anybody. I mean, just
yeah,
the inhumanity of it all. It's I
yeah,
can't stop being boggled by it and
yeah.
how people just buy this.
I know I wanted to go see my mother and my sisters and my brother-in-law in Switzerland. I haven't seen them now in about 2 years, but and I booked these tests. I was just going to go on my own. My wife was going to stay here with Billy,
Mhm.
and I booked the tests, which are going to be 139 pounds one test, and then on the way back, I have to pay another 200 pounds in tests. But then the next day, my nephew told my wife, not my wife, my sister, he said, "Oh, the Swiss have imposed quarantine on anyone from coming from the UK for 2 weeks." So I just decided not to go. But anyway, I've been reading your Endgame Investor for the weekend report. And to
Mhm.
my viewers, I highly recommend, if you are into markets, if you want to do a bit of trading, or even if you don't want to trade, I think Rafi's opinions and views on things are really interesting. And it's only a couple of $100 a year. You can go to Seeking Alpha and look for Rafi's work. He also writes every day for free, I think, don't you, Rafi, on Seeking Alpha?
Not every day. I
Okay.
try to put an article out once a week or so.
Yeah, yeah,
Um, yeah, about like more general things, and I
yeah,
make it more specific in the
yeah,
Endgame Investor. You can look me up on
yeah.
Australib, or just Google Endgame Investor and you'll find it.
Yeah, I'm going to put a link to it below in the description if people want to look at it. But you were talking about something really interesting. I've been looking at this, and many people have, and I've been wondering what will happen to all these reverse repos that the Fed's doing, like almost 1 trillion now. So basically, the banks, they can't hold too much cash anymore because of the rules. The SLR, it's called statutory leverage ratio. So they got to roll over their cash every day to the Fed's balance sheet. So right now it's almost 1 trillion. And could you go over, and I'm going to share here what you said, if you don't mind, on your report.
Sure, no problem.
Yeah, with, let's see, let's bring it up. And you talk about this, and I think it was a pretty good explanation about what's going on here. Let's have a look. Let's scroll down. Oh yeah, there we go. So if you could go over about money market funds, because that's pretty interesting. That I didn't realize that brokerage accounts in the US, when you have cash, they put it into these money market funds. Because here in the UK, if you've got cash with a broker, it stays in a cash account, not a money market fund. But I
Mhm.
think this is quite significant, not just the reverse repo, but also this breaking the buck. If you could go over it a little bit.
Yeah, from what I understand, the in U.S. brokerage accounts, there's a possibility that I'm wrong. I don't think I'm wrong. I think I'm right about this. The cash that's in your portfolio in a U.S. brokerage is not really cash. It's stored in a money market fund, and money market funds are mostly invested in treasuries and commercial paper, from what I understand. So, I mean, part of what caused the 2008 crash was that money market funds were no longer worth $1 a share. So the cash in what was happening is that companies were, after Lehman fell, and then then there started to be like a spiral downward in the commercial paper market, and these short-term liabilities in commercial paper, like let's say a company has payroll to meet, and so they sell that liability on the market for a little bit of interest, and then they can use their cash for other things. So this is standard practice, and then all these commercial paper circulates. But what happened was after Lehman fell, and AIG and all, like it was started a domino effect of bankruptcies, and these commercial paper bills couldn't be paid. So it started really affecting the money markets, the money market funds that were invested in this stuff. And what happened was that they weren't worth $1 a share anymore. So the cash in people's brokerage accounts was worth less and less. So they were losing money, and the Fed had to come in and just make a commercial paper funding facility or whatever they called it.
Yeah, it was like a bailout. I remember. I think it was going in the trillions. People were trying to liquidate their money market funds, and there was a run on them.
Yeah, that's what happened, and until the Fed stepped in and took control of the situation. But here it's like there's so much cash that the treasuries that money market funds are invested in, if they turn it to a negative yield because all the cash is trying to push into them at the same time, then that can break the money market fund from the other direction and make it worth less than $1 a share. And then you have the weird kind of like funhouse mirror universe situation of so much money that the money market funds aren't worth what they're worth, aren't worth $1 a share, and then everything crashes that way. I mean, this is like, it's sort of like going faster than light or quantum mechanics or something. I mean, we're going into like the Heisenberg uncertainty principle equivalent of finance. I don't even know what to call it. It's so weird.
Yeah, you kind of wonder if cash is really safe, because it's almost like Tether. I don't know if you've heard of Tether, that stable coin in cryptocurrencies. They're supposed to be backed. Every Tether is supposed to be backed by $1. But we found out that only like 3.2% of all tethers are backed by dollars, and the rest is backed by money market, not money market funds, but by commercial paper. So all these money market funds, I think they're very dangerous, and they're not really cash.
Mm-hmm.
Yeah. So we got a question here, Rafi, a super chat from Gordon Hamilton. Thank you for that, Gordon. Mario, did you see Mike Maloney's apology to Jeff Christian 2 days ago? It was like apologizing to a guy whilst beating the crap out of him, and YouTube have taken it down. Well, I'm not sure if YouTube took it down, but I try to watch that because I saw like a thumbnail of that, and I didn't watch it right away, and then people averted me to it, and then I clicked on the video and it said that video was private. It didn't say it was deleted, so I don't know what happened there. Rafi, did you get a chance to watch that?
I actually did, yes. I did see it.
So maybe you could comment in, because I didn't have a chance.
Well, what Mike Maloney was talking about, I mean, he did sincerely apologize to Jeff Christian, not without criticism of reporting his actual words, and I try not to get involved in this stuff. I mean, Jeff Christian is a Goldman Sachs guy, and he's might be a good technical trader sometimes, but he doesn't see gold and silver as money. He sees them as commodities, and that's pretty explicit. So
yeah,
he's not really.
What was he apologizing for?
Oh, he used a like a chart with like this crazy picture of Jeff Christian that made him look kind of weird. It was just distasteful, and it was something that Wall Street Silver used it because they're less formal. There's no single person behind them, and they can afford to do this slightly less professional sort of marketing. But Mike Maloney has to stay, and he should. I mean, he should stay a gentleman in a mensch, which is what he's almost always done. So he quoted Jeff Christian from years before when they had a panel, and saying that $100 silver was coke-induced nonsense, or all these just like distasteful comments he's made in the past, and
Yeah.
saying like, despite that, I shouldn't have done this, and it was yeah, he was beating him over the head nicely,
All
basically.
right. Okay. Okay. Let's move on then. We got another super chat from Thomas. Hey, Mario and Rafi, what's your advice on tips? Have you got any advice on that?
Treasury inflation protected securities.
Yeah.
Yeah,
You give us your opinion, and I'll give my opinion afterwards.
it's very simple. Stay out of it.
Yeah.
It's a waste of time, and
Yeah.
they're not even real.
Yeah. Yeah. What Rafi's saying, I agree exactly. And the reason why I agree with him is because I used to trade. I was a futures and options broker, and the market I covered were bonds, treasuries, bonds, government bonds, interest rates, and basically the tips were. I think they were launched in the '90s, mid '90s, late '90s. So there are these securities issued by the U.S. Treasury that are supposed to protect you against inflation, but they use the CPI as a benchmark. So if the CPI is doctored and manipulated, can you really trust tips? And the other thing as well that the Fed does, they buy tips as well as part of QE. So if they're buying tips to make it seem that there's no inflation risk, can you really trust it? So no, yeah, I wouldn't touch them either, Thomas.
Mhm.
So what else? Okay. Oh, yeah. So let's see here. What did you think about the jobs number, Rafi? I saw some headlines saying that it was a really good number, but I noticed that the government jobs rose by like 188,000, while in the last 6 months they've been going up by 60 or 50,000. So I think a lot of those jobs were kind of created by Uncle Sam. Yes, they're jobs, but are they sustainable?
You mean it was the government jobs that went up? Is that what you're
Yeah,
saying?
they went up a lot. They went up 120,000 more than usual. So yeah, the number was better than expected, but I don't think it really shows exactly what's happening.
I mean, I'm still hearing I'm hearing a lot of evidence from, especially from restaurants, that can't get staff, can't get workers. I mean, if it's specifically government jobs that are increasing, it's like handing people checks for doing nothing, and then
Yeah.
congratulating them for making more money. But except it's worse, because if you're hiring more regulators, you're hiring more people to disturb the economy and paying them to do that, and
Yeah.
making life worse off for everyone else, and saying, "Oh, look, we're better." I mean,
Yeah, and you're extracting wealth from the private sector, which is the only sector that really produces anything. So we got another super chat concerning your late. Thank you, Chris Conman, concerning your latest M&M show outlining the World Economic Forum plans to take over a world monetary system. What's the best way for us citizens to beat this back and not allow them to succeed? I guess that's related to the CBDCs. Have you got any views on that, Rafi? How we can fight back?
how would you? Look, you have to have you have to have real money with you somewhere.
Yeah.
I mean, we talk about one of the things that's disadvantageous about paper, gold, and silver is even if it's theoretically deliverable and it's fully backed 100%, there's still a paper trail. And once there's a paper trail, if they need money, they can come and get it, somehow through regulations and taxation and through the banking system that you have to use. So I wouldn't worry too much about CBDCs, because once they are implemented, and if people can only use those, I mean, I think personally, it would crash the economy so fast they wouldn't have time to function. Because I mean, if you think about it, once you have central bank digital currencies, there's absolutely no financial privacy left whatsoever.
No.
And because everything is tracked. And then if you want some privacy, or you want to make a transaction that you don't want people to look at, you're gonna have to do it outside the system, and you're gonna have to do something not through the banks or through gold and silver coins or something. And they're only going to speed up the end of the current monetary system. It can't last, even if they can even get them up in time before there's a crash. But I'm not so worried about it.
Yeah, that's the other thing. I think CBDCs will be a desperate move by the central bankers when the current fiat currency system, uh, implodes or gets under a lot of pressure. So I wouldn't change the strategy of being your own central banker. Just keep acquiring physical gold and silver as much as you can. Yes, we might have to use CBDCs personally, but try to keep that usage to a minimum. That's what I would say.
But
Yeah.
Can I say one more thing about this?
Yeah, yeah.
If we take the problem like down to earth and take just a very simple example. I mean, let's say that your 12-year-old daughter or something wants to babysit and earn a few pounds or a few shekels or a few dollars on the weekends, and then she gets CBDCs, and then all of a sudden her income is reported by the central bank and she's got to pay taxes. She's not going to want to do this, or the people in the open market where people trade coins and use coins and cash for fruit and vegetables and meat in open markets. I mean, these people, they usually, I mean, let's be honest, they usually don't pay that much taxes because they're operating in cash. What's going to happen to them? The prices in these markets are going to go up because all of a sudden all their transactions can be reported. No one's going to want to babysit. No one's going to do any odd jobs. It's just going to be impossible to do anything.
Yeah, and I think at least here in the UK, I saw a report the other day from I think it was from the Treasury and the Bank of England, talking about what they want banks to do, kind of improvements in the system, banking system. And one of them was that they're supposed to provide ATM machines and also branches within certain distances that they're supposed to keep providing cash for everyone. So even though they are talking about CBDCs, I don't think they're going to eliminate cash altogether, even though they're trying to. And I think, if you have your 12-year-old doing something for someone else, you could try to find a way to barter with them as well. You say, my daughter will look after, she'll do some babysitting. If you're a gardener, you can cut my lawn. You can do things like that. I mean, they don't like barter.
Yeah. I mean, that's what we resort to when any system goes down the tubes. In hyperinflation,
Yeah.
we resort to barter.
Yeah.
But gold and silver is just barter with that commodity. That's all it is.
That's right. They're the most marketable commodities. Peter Brunsgaard, thank you for your super chat. Rafi, I just wanted to, I'm sure you follow the gold silver ratio. Just wanted to bring this chart up because I've been looking at this for a while, and I wanted to talk to the viewers about it because, if we look here, this is a weekly chart, and this is why gold and silver have been so kind of boring the last few weeks or months, because they're not going anywhere. But I think this is like a consolidation in the gold silver ratio. And when this ratio, I think the trend is lower, and this ratio drops, I think silver will outperform. And that means, that gold will have probably also have broken out. What are your technical views on the gold silver ratio? Where do you think we could go eventually?
Look, I think it was 1918 or 1919, and then 1980. The gold silver ratio went to 15-1. So on a monetary, when silver was money, I mean, it was the dollars were defined as a weight of silver as well as a weight of gold. I think it was bimetallic standard. The ratio was about 15.5, 15-1 or something like that. And as Daniel Oliver says, I mean, back in 1980, the market forced the Fed onto a gold standard. But it also the gold to silver ratio also runs 15 to 1.
Yeah.
And what that signifies is really that the monetary panic when the gold to silver ratio goes 15 to 1, what that really means is that the monetary panic has reached the average guy in the street who can't afford, a gold coin, but he can buy some silver. So it's like that's the point where everyone's in on it, and you're not going to get any higher than that. I don't think silver is going to go to 10 to 1. If it reaches 15 to 1, it'll be very brief in a panic, and then it shouldn't be there for too long, unless you really go back to a bimetallic standard. And I don't see that happening.
Well, even in a bimetallic standard, I would say that 15 or 16 to 1 is a pretty good ratio. And it's because it was, I think, Isaac Newton who put the UK on a bimetallic standard in 1705, if I'm not mistaken, at 15.5 to 1. And Alexander Hamilton did the same for the US in 1792. And then that ratio had to be tweaked up to 16 to 1, I think, in 1837. And the fact that it's gone back to that level in 1918 and 1980, I think is quite significant. Yes, some people say that it could go to 8 or 7 or even 1 to 1. And they even note that in Egypt in ancient times, silver was more valuable. But I think if I had to decide to exit some of my silver for gold or anything else, I would think 15 to 1 would be a good ratio. And especially if the Dow to gold ratio is also at 1 to 1 at the same time, I think those would be two good indicators.
Yeah.
Yeah.
So as for the technicals now, I mean, I'm not a technical analyst, but from what I see, it's the coiling, the meaning the gold to silver ratio isn't going anywhere in these past few weeks. And
No.
that usually means there's some kind of big move ahead in one direction or another.
Yeah. I mean, the trend since last year, since we topped at 125 or so, has been down. So I tend to put the probability into that it will go lower. So just going to have a look here, Rafi, at some of the questions. See if we've got more questions. Yeah, people feel free to ask questions. We also want to take questions, not just talk. So I think someone said, Rafi, silver is still money. And I think you still believe in that, don't you, Rafi?
Yes. Silver is definitely still money.
Yeah. Someone thinks the Dow gold ratio go to 1 to 1. I think so too. And I think it could be around 25,000. Really, I know it could be at 8,000. You could see the Dow collapse and gold still do quite well. But I think it's going to be a bit higher for gold. Let's have a look. Someone here from Shawnee, silver never going up in this new made up green agenda. What do you think about that comment, Rafi? Silver never going up in this new made up green agenda. I think if anything, the new green agenda would help silver because a lot of the technologies need silver.
Yeah, I don't know exactly what it means by the green agenda. I mean, like renewable energy. I mean,
yeah,
we're getting to the point where it's getting kind of obvious that a plan by a government to push a certain kind of energy consumption is really not going to work. It's going to impoverish a lot of people because if it made sense to do it, the market would have done it already because it would have saved money. But the fact that it's not doing it means that it doesn't save money, which means it makes people poorer if they try to do it, which is what government is going to do if they try to force it on California, for example, which is really in a suicide doom loop, it seems.
Yeah, I think, I agree with the comment there that it's a made up agenda. They're pushing it really hard. It's to do with the climate crisis, climate, how can I say, they call it climate existent, I don't know, climate crisis. They're trying to push it. The World Economic Forum, the central bankers are pushing. all the big banks. I don't think they're going to succeed. And even if they don't, I think the market will push for environmentally friendly things. And I think silver will be part of it no matter what. So we've got a question here. Do you, Maneco64, do you think the next move in silver could complete the cup and handle? Well, yeah, I'll answer that, Rafi. If you want to elaborate, you can. I think that I have to bring up a chart here though. So let me draw up a chart. I think the cup and handle in silver, we need to break through 50 for it to confirm, because it's such a long-term chart. This cup and handle has been forming since like 1980. So let me just build up the chart here. Let's do it. Quarterly maximum. Oh, here we go. And then I'm gonna put it into logarithmic because it's better. Apply. So now I can share it. Okay. So that you see that the top here, that's the top of the cup. So that's the cup here. That's the handle. I think we, the handle, we've broken out of the handle, but we've got to break out of the top of the cup, and the top of the cup is at 50. So some people, probably Jeff Christian and the bullion banks, they think, yeah, we might go through 50, maybe go to 70, but then that will be a top, and then we'll come back down to 30 and 20. And I think a cup and handle like this, I think it's an epic cup and handle. What it means, and I think Tavi Costa from Crest Capital, he's looked at this, and he thinks what it means is that it's a chart of a market that's been kept under wraps or suppressed for decades, and once it breaks out, it's going to be very difficult to stop it. So yeah, I think once we break through 50, it's going to run. Of course, we could have a short-term correction back down below 50 to retest that, but I think it's quite significant, the 50 level. What do you think, Rafi?
Yeah, I think, fundamentally, we have to look at this chart not as a chart of silver, but as really a chart of the dollar. I mean, when silver is at 50, that means a dollar panic is in full force. And in 2011, I think the dollar index was at near an all-time low. I don't know exactly how the Fed got control back on the dollar in 2011.
Can I just add something there? I think 2011 was to do with the European debt crisis. And
the flight to the dollar there. Okay.
Yeah, but I think if the euro had gone under, and all the Europe, if they had let Italy, Spain, Greece, and Ireland default on their debt, all other countries would have defaulted. It would have been a domino. So I think even the dollar would have been under threat, not just the euro. And I think what saved it there was Mario Draghi coming out, and saying, we're going to throw everything at it. Who knows? But I agree with you, though. If you go back, the dollar used to be a silver coin. And that's what a lot of people like Jeff Christian and what's his name, the other guy, Harry Dent, don't understand, that the dollar is, you have to go back and to see that the paper dollar that we have now is a substitute, as you say, for silver and gold.
Yeah, it still is. And so when silver is at like 300, 400, 500, I don't know what number it's going to get to. That just means that there's a dollar panic. It doesn't mean that people suddenly love silver. It just means they're going back to original money because the dollar isn't working. So whatever number that happens to be, whatever number the market sets that at, it depends on the number of dollars that exist, and they're going to be a lot more by the time this happens.
Yeah, and there's not enough real money like silver and gold out there, and that's why those prices are going to seem so outlandish, I think. We've got another super chat from Peter Brunsgaard. He's got a question. Mario, Rafi, will Basel III help the price of physical silver and gold in the long run? Rafi, do you want to?
Yeah, it should. It should. I think Peter Schiff was talking about this in his latest podcast. I mean, and I also warned my subscribers about this. Like, don't think that suddenly Basel III is going to kick in and then all of a sudden everything's going to change overnight. And that markets don't work that way, and the market makers are not that simplistic that they're just going to let that happen, because that means their pockets get picked. So they set up. They've known about Basel III for a long time. And gold becoming a tier one asset is certainly a good thing for gold investors as money, but still, it's not going to cause like a rush into gold. But the thing is, when it does, it's going to be much more. When that rush to gold happens, it's going to be much more convenient for banks to comply with it and to let it happen. So yeah, it's a positive. But I don't think we can deduce much timing from it, and we shouldn't try, because it'll just because basically we have to be comfortable with what we don't know, and we don't know what's going on in the banking system, and we just have to sometimes just accept that and deal with what we do know, which is this system cannot continue.
I agree. Yeah. Yeah, and the other thing that about Basel III, I think it's also going to affect all other commodities, not just gold and silver, because I remember prior to 1999 when they abolished Glass-Steagall and allowed commercial banks like J.P. Morgan, Citibank, Bank of America, and others to do investment banking aside from commercial banking, because prior to 1999, since 1933, when they introduced Glass-Steagall's, a commercial bank like JP Morgan couldn't deal as an investment bank, and they couldn't deal in commodities. And then they started dealing in commodities, but they don't really deal in commodities per se. They deal in unallocated. They call it swaps. And I know this because being in the city of London for 20 years, and especially in the 2000s, I didn't deal too much in commodities. And if the commodities that I dealt in were exchange traded commodities, real commodities markets, so to speak, like COMEX, CBOT, CME, but I could always hear other people talking, oh, that desk, they do derivative swaps. They didn't even trade on an exchange. So yeah, it's not only gold and silver that have been manipulated by this credit unallocated market of Basel III, but it's been copper, oil, everything. So I think it could be a huge, like you said, it's not going to happen overnight, but it could be gradual. Things could change. And that's why I think commodities are still in the beginning of a bull market. And I think you spoke about that, didn't you, about the technical pictures here for the CRB. And I'm going to bring this up. Maybe you want to go over a little bit, the CRB. Here we go.
Oh yeah, I found something that I didn't really notice until a few days ago, that it looks like we have, you could call it, is it when the 50-week moving average moves above the 200-week moving average? It's called a golden cross, I'm pretty sure. So it looks like it's happened 1, 2, 3, 4, 5, those blue circles. It's happened 5 times in the past 21 years since 2000. So if you look at the first circle around 2000, it signaled a top, and it also signaled a top in 2011, and another top in 2018. The only time it signaled the beginning of a massive bull market was in 2002. So when these things happen, they tend to signal something big. And now, so here's where you have to kind of divorce yourself from the technicals and stop thinking of voodoo, charts of lines crossing and some magic, and go back to common sense. Like, do we think with all of what's been going on and all the debasement all over the world and the trillions of dollars in currency units printed everywhere, that with commodities in a huge bear market since 2008, do we think this is going to signal a top? I cannot see that. I think this is like the cross of 2002, where we're headed for like some kind of 2008 blowout in commodities. And I think gold and silver will lead that.
Yeah, I agree with you because, like you said, the fundamentals, I can't see the politicians or the bankers reining in their fiscal and monetary stimulus. It's just not, in our so-called democratic system. Ever since the 30s, the trend has been to stimulate, the Keynesian mantra of more fiscal spending, government spending, and also money printing. And we can see that, at the G7, they keep going on about infrastructure projects and everything. So yeah, I agree with you there. So yeah, I guess that would be only the second time in this century that it would point to a new bull market. And yeah, you hear a lot, people on Wall Street and the central bankers saying this is all transitory, but the base effect as well, that's another thing that I wanted to talk to you about, because I can understand the base effect from like March, April, May last year, that the year-on-year numbers this March and April and May are a lot higher. But what we've been seeing month on month, ever since April to June, is that we're seeing, CPI and PPI going up like 8 or 10%, and that's not the base effect, right?
Yeah. If it's on month to month, they're still going up faster and faster. And some of my subscribers are telling me, they live in different countries in Europe. One from Sweden says that tuna went up 7% just last week. It's been steady for months throughout COVID, throughout the pandemic. And I'm allowed to say the word.
No, it's all right.
Yeah. Now it's up 7%, and some of my businessman friends here who sell vitamins online, they're getting squeezed. But interesting. I had a pretty long conversation with this health food salesman, health food business owner that I know, and he said like, since his margins are about 300-400% with this health food stuff, that he's not going to mark up prices just because his costs go up, let's say 10-20%, because it's not worth it for him. But what's going to happen, he said, is that as people, in the smaller margin industries, in like food and supermarkets, where margins are really, really thin, they have to pass off costs really quickly. And when people start paying more for basic necessities, they're going to start paying less money for high-end health food stuff. And the weaker companies will have to, bow out, and you'll have more consolidation among the more efficient health food stores. And we'll start to see some die off in the higher margin industries. That's how it's going to progress.
Yeah, I've noticed here, up until a few weeks ago, the price of diesel, to fill your car with diesel, because I have a diesel car, was stuck around £1.29. 1.299, and that's how they put it. But I've noticed that lately it's like at 136, and I don't think it's going to go down anytime soon. It's probably going to go up next week because the pound has come down against the dollar and oil prices have gone up. So we have a debate here on the chat about sterling silver. I think Lord Humongous is saying that it's 90% silver. I think Sebastian Hopkins is right. It's 925. So it's 925 silver, and the rest is copper. And the reason why the circulating coins are never pure is because if they were pure gold or silver, they would wear out very quickly. So a lot of bullion coins, of course, some of them like the maple leaf are 999, but Yeah, and I have some of them, but I prefer the circulating coins. They're more sturdy. What about you, Rafi? Have you got any preferences for silver coins or gold coins?
Well, I have both junk silver, not the constitutional, half dollars, quarters, nickels. No, sorry, not nickels, quarters, dimes, half dollars,
Yeah,
um, because they're recognizable. And
yeah,
I also have bullion coins that I just got um, through a lot. So I have enough silver for now. I'm not going to be buying more,
yeah, yeah,
at least physical, because I don't want so much with me. I have
yeah.
enough, and it's really for emergency purposes. If I need to buy food and shekels aren't working,
Mm.
then I'm gonna need to trade for this stuff. That's why I have it.
Yeah, I have some old ones. They're a bit more numismatics. Like I have a Brazilian coin, silver coin from the 1800s. I probably would not sell this. It's more of a collector's coin. But I was reading a book by William Silver, which I made a video about today. It's about silver, all about silver. And apparently in 1980, when you had the Hunt brothers and silver went to 50, uh, they called it the Great Melt because the numismatists were really sad because people were getting rid of real collectible silver coins because silver went up so much. So I think I'm not sure what will happen this time. I don't think people have as much silver or silverware as they used to in the early 80s. So I think we're still far away from the top in silver. And I'm not sure, if we do have a crack up boom, if people will want to get rid of silver for fiat, they'll probably just be using it for barter. So, but I can't tell what's going to happen. So we got a super chat here. Thank you, Norman Burton. Hi, Rafi and Mario. What will happen to Western currencies if there is a civil war in the US? Also, what will happen to gold and silver price wise? Do you want to?
Well, I don't think there's going to be a civil war in the U.S. in terms of a hot war of states fighting each other. I mean, it's hard to do that when the federal government has nuclear weapons and that's hanging over the head. But what I think is much more likely to happen in the U.S. is once the dollar does collapse, I think the entire country is just going to disintegrate. I think the federal government will just lose control over the states, and they'll just break up into however many units, 50 more by county. I don't even know, but it's going to disintegrate, and it's not going to be that this disintegration is going to cause the dollar to fall. I mean, the fall of the dollar is going to cause the disintegration, and that's how
Yeah,
it's
and
going to go.
I think all fiat currencies, not just Western fiat currencies, will be in trouble when that happens because they're all based. They have their major reserves are dollars. So if the dollar goes, they will all go, and that's why I've been telling people that you need a bit of gold and silver.
Yeah.
We've had a question here from Joker Alpha, Rafi.
Mhm.
What do you think transitory inflation means? 1 year or 10 years? I personally think that central bankers mean that it's going to be for about 3 to 6 months or a year, and then it will come back down. What do you think?
I think that this is just a mind game. This is just mind control. There's nothing more to it than that. They will keep extending and saying transitory for as long as people buy it. All it means is don't pay attention to the man behind the curtain. That's all it means. So they'll keep changing the definition, and they'll say, oh, 6 months now, 9 months then, 12 months, another. They'll just keep stringing it along as much as they can because there's nothing else they can do.
Yeah, and when it drops like from 5 to 3, they say, "Oh, you see, it was transitory," but it's still rising by 3%, right? So they're going to keep fooling people into thinking there's no inflation, even if it drops to 3 or 2, you're still losing 2 or 3% of your purchasing power. So we got another comment here. Peter Schiff thinks price rises are getting we're getting are from overweight inflation due to economic lag, excuse me, economic lag, makes me think we'll have 13 years. Sorry. Something in my throat makes me think we're going to have 13 years worth worth of chickens all coming home to roost in the next crisis. While some people think inflation gestates for a long time and then it appears, right?
Yeah, and that's how bankruptcies happen. I mean, they start out slow and then they go fast. What everybody says, that's
Yeah.
how they develop.
Yeah.
And it's not just going to be 13. It's going to be like 80, 90 years of this stuff. I mean, the reason that Nixon's quote unquote closed the gold window, a phrase I don't really like using, but that's people recognize it. The reason he did that is because they were printing money from 1933 to 1971, and the exchange rate at 35 didn't go anymore. So all those chickens have to come home to roost. And all of them. It's not just 13 years. It's the entire inflationary experiment from 1933 onwards.
Yeah, and
this is a monster.
Yeah, the other thing as well, if you look at Weimar Germany, they started inflating right after World War I kicked off, and it wasn't up until, and that was 1914, and it wasn't until 1923 that it all, showed itself. So like even just in Germany, it took a while for the inflation to rear its head. And yeah, I agree with Rafi. It's not just since 2008. It's since 1971 and even before that. So someone else here saying, statue of Queen toppled in Victoria, British Columbia on Canada Day. Oh, that's not important. What is your opinion on another Black Swan event happening in the next 12 months and the effect on the current situation? Alex Cooper, any ideas about Black Swans? Which ones we could have, Rafi?
Well, the whole idea of a Black Swan is you don't know which one it is.
Yeah, that's right. Yeah.
Look, but what I'm looking at, and just in awe, is again this reverse repo stuff. I mean, there's $1 trillion that is being shuffled back and forth between the Fed and the banks every day, and it just keeps getting bigger and bigger because they keep printing more and more of it. And it's gonna. I think Zoltan Pozar, this he's quoted a lot for like these esoteric stuff, but he thinks it's going to reach $2 trillion by the end of the summer or something like that. I mean, something's going to go wrong with this. This is not natural. It's just mind-bogglingly crazy. So I don't know what can go wrong with it. I don't know how it can stay stable when you have $2 trillion passing between the banks and a central bank every day. Something's going to slip up.
Yeah, I mean, like you said, Black Swans, you never know. They come out of left field what it's going to be. But if I had to guess, there's a lot of talk about climate lockdowns and maybe cyber security, cyber lockdowns, cyber pandemic. So that could be something to keep an eye on. But yeah, I don't think things are going to get back to pre-2020 normal, unfortunately. I think even though they keep saying we're going back to normal, it's not going to be normal, unfortunately. But yeah, as Rafi said, it could be anything. Who would have thought in December of 2019 that what happened last year would have happened? I had no clue that it was going to happen. Anyway, let's see if there are any more questions here. Silver Highwayman says, food shortage last year. Crops were decimated by locust floods and earthquakes. No crops have been replenished. World Hunger 2022. Any views on that, Rafi?
Hunger? There's always something going on with crops, and there's some kind of disaster. But there hasn't been starvation. I'm not worried about a natural disaster destroying crops. I'm worried about a monetary disaster where crops cannot be distributed by a monetary system. Because if you go back to let's say the Great Famine, Mao's Great Famine in China, it wasn't an issue of growing food. They had plenty of it. It was an issue of distributing it because they couldn't get it to where it needed to go because there were no monetary signals because Mao decided to distribute everything himself because he was crazy. So that's really the problem. It's a problem of distribution. Money is an equitable distributor of goods and services and resources on the planet. If you don't have the good money, you can't distribute, and it might as well not exist because if you can't distribute it, nobody can get it.
I think I think the exorbitant growth in the money supply in the last 16 months is part of the problem. I think a lot of producers and farmers and whatever else, apart from the supply chain problem, they're holding back. They don't want to give up valuable resources for money that's losing value so quickly. So yeah, I think that's going to be a lot more of a danger in a hyperinflation. People lose confidence in the currency, and producers, they hold back because they don't want to sell something valuable for something that isn't valuable. So it's not even a matter of crop shortages, like you say.
Yeah, and then you go into totalitarianism where government says, "Oh, you're holding back. We got to force you to feed the cities and make slaves out of you," and that's happened before. And
oh yeah, and even
terrifying.
Richard Nixon put price controls, in the early 70s, rent controls in New York City, and it never works. It makes things even more scarce because all it does, it's people just go on strike. Producers go on strike. Let's have a look. We've got about 5 minutes. We'll take some more questions. What does Rafi see for gold and silver backed crypto? Any idea? Do you see any chance of gold and crypto that has gold and silver backing?
Sure. I mean, that could be a good idea. I mean, there's nothing. I don't know why people are so impressed with an Excel spreadsheet that can be shared among people. I mean, it's pretty. It's not that. I don't know the technology exactly how it works, but the concept is simple enough. It's just a method of checking and fact checking of a distribution sheet. So if you want,
it's an open ledger, isn't it? Blockchain is an open ledger.
That's all it is. So if you want to have a gold-backed cryptocurrency, I think it could be a good idea. It could work. No problem with the technology itself. Just like, but I don't see an inherent value that a unit of nothing is a money. If a unit of account that has something that has money backing it could work, go for it.
Yeah, I think one of the rarest commodities these days is trust. And, even in a blockchain based system, can you trust really like the miners or, I know everything is public, but can you trust this, the internet to keep running? So, and even a gold backed crypto, are you going to trust the people who are doing the auditing to make sure that the gold and silver are there in storage? It's really hard. I think, the blockchain is supposed to solve the problem of trust. It's for things to become trustless, but I don't think we can have a quite normally functioning society if people don't trust each other. Any views on that, Rafi?
Yeah, you can't have a functioning society without trust. I mean, just in the most basic of senses, if we're all going to treat each other like a blockchain, then we're not going to see the humanity in each other. That's one of the things I love about the gold and silver community is that their personalities and the souls of the people in this community are as hard as their money. I mean, we're connecting, across these like chasms of fiat nothingness. that are engulfing us and just trying to build some kind of a web. I mean, you can what I've noticed very clearly is that the amount of inflation, the amount of monetary inflation is very proportional to the amount of like soul or personality inflation among the human race, and the emptiness that is so pervasive in social interactions. It's reflected in texting and the way we interact with each other on every level. There's such emptiness, and it's proportional to the amount of inflation in our money. And when it all comes crashing down, I mean, we're gonna have to go back to real relationships, which is why I say this is not just an investing game. It's a invest in your neighbors and in your friends, deepen your relationships, build a real social safety net. So when this thing goes down, you know who you can rely on for real.
Yeah, and you look back at the names of, let's say, the banks, JP Morgan, it was called Morgan Guarantee Trust, wasn't it? You had to trust the bank. Someone is asking here, GG, Maneco64, do you happen to know the total market cap of physical silver? I just did a Google search here, GG, and it says, I'm not sure if this is right, but it says the market capitalization of silver is currently around 1.45 trillion. This value was obtained by multiplying current silver price of 26.60 per ounce with the amount of silver that is estimated to have been mined so far. Yeah, so yeah, that could be right. You know, the total amount of silver ever mined in history, but I would say a lot of that silver is not accessible, because it's in my computer, in your computer, in mobile phones. It's never going to be recovered. I think the gold amount is like 10 to 11 trillion. That doesn't mean to say that there's 10 to 11 trillion that can be, you know, access to, you know, right away. Any views on that, Rafi, about silver market cap? And
if it's 1.453 trillion.
No, but whether you know that's really like out there, you know, because guys like Jeff Christian, he said that there's so much silver out there that it's almost like a waterfall, like, you know, that it's all over the place. And I don't agree with him, because a lot of the silver that's ever been mined is consumed.
I don't. If it was everywhere, it wouldn't be worth $26 an ounce.
Yeah, that's right. That's right. So we just one last question here, because Rafi, it's getting late in Israel. Rafi, do you have an idea of commercial silver stock and physical delivery levels at the moment?
You mean at the COMEX?
I guess so. Yeah.
I think there was about 8,000 something between 7 and 8,000 contracts that were stood for delivery. But you know, I'm researching the COMEX. I'm trying to actually get delivery of a contract. I'm working on it, and if I can actually do it, then, you know, I'll make a documentary on how it's done. I mean, to actually have the bars. And I had a cousin that once worked at the COMEX. He actually quit 3 weeks ago. He's trying to help me through the process. And just because there are silver deliveries on the COMEX doesn't mean that anything's moving. It just means that warrants are trading hands.
Yeah,
and,
you can exchange the warrants. They call it a delivery, don't they?
Yeah. The term for delivery on COMEX is loading out, but they don't tell that to you unless you actually bother them. And they make it very difficult to do that. And they just it's like trying to talk to the Israeli consulate to get your family here. It's very hard.
Yeah. So yeah, just before I finish, as for deliveries, when I worked as a futures and options broker, I didn't trade much silver and gold, but one of my colleagues, one of his clients, started trading a lot of gold and silver futures, and I helped him out a lot because I knew a lot about gold and silver market. And I asked my boss, you know, if we were to take delivery for our client, would that be okay? And he said, oh, don't even think about it. We never do it. So that's how the brokers, most 99% of the brokers, they don't want to take delivery. Just one more question here. Someone asked, if you were to keep fiat currency at home? Is that something you would do? I personally don't keep much fiat currency. If I were to keep some, I would maybe keep maybe a month's worth of expenses. What about you, Rafi?
Yeah. It's always good to have some cash, some fiat cash with you, because you're going to need it if there's an emergency. I mean, that's just standard. You should always have that. Whether
Yeah.
we're in a monetary crisis or not, to have some cash on you for whatever you might need. But yeah, I wouldn't do more than a month or two.
All right, Rafi. Thank you very much for joining us. And yeah, I wish you all the viewers and Rafi a great week coming up. And hopefully we'll talk again, Rafi.
Yeah, look forward to it.
Thank you. Take care.
Okay, bye.
Bye.
All right, I'm headed.